three alternatives on how this thing will end, in my opinion. I find this blue count, which says that this was the top in July, I find that to be less likely. I don't think the probabilities really support that. There's no evidence in the economics that we're walking into a recession right now. So it'd have to be some kind of event. And I can get into what that event would be. Who knows? No one really knows. But if you look at some of these bank charts that I've been showing, you can see how an event could unfold. I mean, these charts are incredibly unhealthy. So I wouldn't be shocked if banks come back into the picture, which maybe causes us to break below this 42.45. But this is the line of the sand. Anything above 42.45, in our opinion, would be a buy the dip environment for those that want to play these final swings up. And we're going to attempt to. We're still sitting in a reasonable amount of cash. We probably are going to hang on to cash, regardless of whether we take, a Q4 top or a Q1 top. But we still would add to some of our exposure, whether it be one of these two. That's just how we're going to play it. But anything above 4245, and that's a buy the dip moment. If we break below 4245, then this becomes my primary. This is the market picking up on something. Maybe it'll be public by then, maybe it wouldn't be, but that would be a very, very big warning if that does happen. The other scenario is that this is a fourth wave. 1, 2, 3, A, B, C right here. And then we would probably get some kind of a low into October with a final rip into Q4, Q1 that would take us up into our target zone. That would be a phenomenal move. If we could capture that, that would be great. But now we have to game plan for the fact that this may be all we get in 4. So we have 1, 2, 3, and this is 4. And then we're tracing this overlapping messy move directly towards our target zone. This would probably put us into some kind of an October, November top if that does happen. We would hit our targets there. And even if we are in this bullish red count, which would say that that move up would be a third wave, then we get a fourth wave and a final push into Q1, probably late Q1 at that point, to new highs, we would still have to deal with some kind of a deeper correction going into year-end, early January. So this would be a place you probably want to get somewhat defensive, regardless if we take the direct route or we drop and then move forward into that zone. And so the levels that matter to me, 45.18, I might give it a little bit more room, 45, even up to 45.30, 45.25-ish. But if we start breaking above that level, then this green count comes off the board. And what that means is that this is what happened. And then we're tracing this overlapping kind of diagonal pattern directly towards this level. And that won't be fun. Diagonals are not fun in an uptrend because they're prone to heavy swings. There's 3-wave patterns in all directions. So it's quite confusing. It's difficult to map out. But that would be my primary perspective. And so I'm using these levels as kind of my guide. A breakout above there, that would be an indication. If we break down below 44.30, then the green count comes back into the picture. And we're going to be targeting probably 42.75-ish, I think is good, 42.80-ish, around there, probably in that October time factor coming up. So those are the levels that really matter. That's all that really matters right now. Are we going to break out above this level, which looks like we are based off of the price action and the feeling in the markets right now? Or are we going to break down below here? And that's going to determine, when and where we put some of our cash into play.